Hi there, welcome to Nepi Invest and welcome to the stock of the day. Maybe not a surprise, Telix Pharmaceuticals. The reason this might not be a surprise is because I am a fan of this company. And what I'll do in this particular video is I'll go through how I discovered Telix Pharmaceuticals because that is quite interesting lesson and why I do pay attention to quality reports released by companies. So Appendix 4Cs and Appendix 5Bs. I've actually have received that question before, and the question usually revolves around, I don't find anything in Appendix 4Cs to really like. But on occasion, you will find something, and Telix Pharmaceuticals is a perfect example of that. And I'll go through that, how I discovered this company, and they'll also look at the reason why this company is a stock of the day. They did release an upgrade. And the share price has not rallied as much as you might expect. Share price up 4% on the back of this particular announcement. And a lot of times when a company does upgrade, you'll see the share price rally a fair bit. But I think the market expected probably an upgrade, and that's why the share price hasn't rallied as much. So what I'll do is I'll go through this particular update and then also have a look at the chart and why or how I discovered Telix, which was in October 2022. So let's have a look at this particular announcement, which they did release on the evening of Monday, the 13th of January. Was it the evening? Is 5:10 p.m. evening or afternoon? It's sort of in between the two. Maybe depending on which time of year you're talking about. What time of year you're talking about. Anyway, I love the title of this announcement. Telix exceeds financial year 24 guidance with US $142 million of fourth quarter revenue. So for a shareholder like me, straight away I know this is an upgrade. It is positive. I don't have to worry for one split second as the document is opening up. And this is an upgrade. This is a definition of an upgrade. Not the best sort of an upgrade. I do prefer profit upgrades, but this is a revenue upgrade. So they are receiving a little bit more revenue than they are expecting. And that's all you have to know. 4-year guidance exceeded. Talking about unaudited revenue of 783 million Australian dollars. 783 million Australian dollars. This is relevant for a reason, and one of the reasons I'm excited about this company exceeded the previous guidance, which was between 745 and 776 million, which is a nice increase of 55% from financial year 23. That's all you have to do or need to know about this particular announcement. They could have actually shorted it, maybe have just a one line. Sometimes that's all they need. If a company does upgrade something, all they need is one line. I've seen that before. And typically, if you do see a one-liner, doesn't always mean it's positive, but there's a good chance it's positive. Okay, so an upgrade from Telix. The market loves upgrades. I love upgrades. It means the company's performing better than expected. My one slight problem with this company is at this point in time, they are one product company. In fact, do you think they mentioned this in the announcement summary? Yeah. So in the sustained revenue growth, second bullet point, Telix revenue is currently generated predominantly from sales of Illuccix, its diagnostic radiopharmaceutical for prostate cancer PET imaging. So that's my one gripe on this company is they are one product company, but they will change that in the next 2 years, maybe even in 2025. As they get more products to commercialization, this company has the potential to be an absolute behemoth, to be one of the best healthcare companies on the ASX. Okay, so now I'm going to talk about how I discovered this company. And I discovered this company, I actually do note where I bought Telix in TradingView. There it is, back in October 2022 at $6.66. And an unfortunate number, but I don't really care about that. And you can see share price has gone from 666 to 24.98. I can almost guarantee you, when I bought shares in this company, some of you are probably thinking, oh, I don't know why. It's so expensive, has no revenue, very little revenue. Why are you buying this company? Well, I'll show you why. And it has to do with revenue. Well, it has more to do with receipts. So let's have a look at this company's announcements. And it has to do with Appendix 4C, by the way, and Appendix 4C. So what I'm going to do is go through the price sensitive announcement. I didn't realize you could do this, filter it. And we go back to 2022. So let's go all the way back. What I'm going to do is open up the July or June quarter Appendix 4C. And then I'm going to open up the October or September quarter of Appendix 4C in 2022. So have a look at the first one, the June one. So I would have had a look at this one, and I would have moved on to the next company almost immediately. Telix Pharmaceuticals had receipts of customers of 5.4 million and were operating cash flow negative by 25.8 million. And not only that, they were burning a lot of cash in investing activity. So I was thinking, I would have thought at this point in time, okay, move on to the next company. This company is burning through so much cash. Now, if you notice, if you can just pair the receipts from the current quarter to the year to date, there actually was a bit of an increase from the first 3 months to the second, or the first quarter to the second quarter. So it went from about 2.1 million to 5.4 million. Actually, would have been from 2.1 million to 3.5 million. So a little bit of an increase. And I might have noticed that, but look at the spending. Look how much they were spending lots and lots of money. So I would have completely ignored this particular Appendix 4C, wouldn't have done any research on Telix at all, because at this point in time, and even now, this is sort of Appendix 4C or cash flow statement I will ignore. But then came the September quarter, and I saw this, and I immediately wanted to take a position in Telix. And you'll just see the big difference. Okay, so remember that the previous quarter, they had receipts of maybe $3.5 million. In this particular quarter, 1 quarter later, receipts of $44.5 million. And that did take me back. I went, geez, they went from 3 million to 44 million. My first thought was maybe there's a one-off. No one-offs. This was a real significant growth in receipts from 1 quarter to the next. This is why I look at Appendix 4Cs for this exact sort of thing. And I took a position in Telix the next day. They were still operating cash flow negative, but they've turned that around. They are operating cash flow positive now. Still free cash flow negative, that sort of thing. But it was just the growth in receipts and the growth in revenue. So just remember how much revenue they're going to produce in this financial year. What was it, $700 million, something like that? So they went from a couple of million 2 years ago to 700 million in a few years. That's the sort of revenue growth I am looking for in companies. And we have one of those companies on the ASX with Telix Pharmaceuticals. And that's why the chart looks like this. In fact, if you have a look at the weekly chart, that's why the chart of Telix Pharmaceuticals, the weekly chart, looks like this, because this company is hitting it out the park. It's a nice little baseball reference. So beautiful looking chart for Telix. In fact, today the share price didn't get to an all-time high yet, maybe. A little bit of sell-off in shares today, but that's okay. Anyway, so that's all I have for Telix Pharmaceuticals, why I became a shareholder in this company, and why this chart looks pretty good as well. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.